Good morning out there, traders. It is May 29th, 2024, and welcome to the Apteros Daily Market Insight. Let's dive into our recap, and then we'll update our session plan and levels for today. So if you're looking kind of at the overall context here from yesterday, we had a rotational overall context with two lines in the sand, one for the Bulls, one for the Bears, and we are essentially looking for a move out from the middle to get to the edges where we can start looking for positioning with the best risk reward. We ended up essentially coming into the open, having the idea that we were going to continue to the downside, possibly into that neutral zone, and get our full push down into that bull line in the sand zone. And that's exactly what we ended up seeing. It just took longer than we probably would have liked. There really wasn't a way, according to the DMI, to get short in this section. So unless you had a good intraday framework for being short, kind of off of where we were talking about in the DMI and pushing down into that bull line in the sand, there really wasn't any opportunity for us early in the session. But late in the session, we end up getting a really nice inflection coming out from the bull line in the sand there in the last hour, hour and a half, which has been kind of a little bit of a theme for us in the last couple of weeks. We've seen a lot of setups kind of occurring coming into the close or the late part of the session and getting a really nice push coming out of that, almost reclaiming ourselves all the way back up into the main target area there, but not quite getting there overall for the end of the day and the end of the session. So really only one opportunity along with our main scenario, which was staying rotational inside of this zone. Good bullish opportunity off of our line in the sand there. And yeah, that was pretty much the story of yesterday. So now taking a look at what we have going on today, we've seen this type of scenario play out before. Last week, especially, we had opportunities very similar to this, very similar context to this overall. So what we actually have going on here is a couple of time frames have shifted to the bearish side of things, right? We saw this last week before once in the context as well. We have more bearishness overall in this market than we do bullishness. However, the area that we have that is bullish is causing a problem for us because it's not failing. It's not breaking down. We're getting good inflections from that zone, and that trade idea is still holding up. So it's still valid. It's still the what is picture. Now, if you're looking at this from a bigger, perspective, this really is kind of the end of the line for the Bulls. This kind of is kind of the end of the line for the Bears, and everything in between is where we kind of monitor the more precise, shorter time frames. And the shorter time frames have also shifted to the Bears side of things as well. So there's more time frames stacking up for the Bears than there are for the Bulls. And that's really the breakdown of the overall context that we have today in the ES market. However, because of that particular scenario, we still can't say that this market has shifted into a completely bearish overall context because that area for the Bulls continues to see inflections, continues to see activation from the Bulls and, rotations coming out of it. So until this particular area breaks down, we really are still in a little bit more of a dissonant overall picture. Now, like I said, our overall bias, because we have multiple time frames that are bearish and only one really that is bullish, is more towards the bearish side of things. But because of this dissonance, that's one of the reasons in our analysis that we're seeing, much wider rotations in some higher volatility in terms of, longer rotations in one direction and in the other as well. So that's essentially the full breakdown of the context and the scenarios that we're looking at. And whenever it comes to the actual trading scenarios for today, really this is our main line in the sand for the session. And what we're looking at here is scenario one being bearish below that zone into this target area, which we've already kind of seen at this point. So now we're in that dissonant zone where the inflections are expected kind of coming out or down below. If we see a breakdown of this bull line in the sand, then we have a nice, clear scenario down into that neutral reference as the main target for scenario one. But any pullbacks back into this line in the sand area, scenario one is still valid for bearishness, and that's kind of what we're looking for out of scenario one. Now, if we get scenario two, that would mean the market kind of rallies out of this zone, comes up through here, and we end up seeing kind of a hold up above there. And really, the first target we're looking for is right here into that neutral area, and then any continuation coming up is into that main bear line in the sand zone as well. Once we get back up into this zone, that's where, the reality sets in for the Bears or the Bulls, right? Because if the Bears hold it, we stay kind of in this general, rotational type of zone where we're monitoring for more value being built and so forth. If we don't, and we break out above it, then we get more into a bullish trending type of environment. And that's what we're looking at overall in the context. But just for the scenarios, just a quick recap of those. Scenario 1, bearish to the downside, have to break through that to get any kind of continuation, right? Scenario 2 would be that we kind of continue up from here, looking for that move across into that first target, and then a continuation up into this overall target destination area. And that would be kind of what we're looking for out of scenario 2. And that would be really the main ideas for today. All right, so trade well out there, mind your risk, and let's get after it.